Yo, what is good, guys? Quite the crazy day. You had positive CPI numbers. Now in this video, we're going to look at where that will take us, as well as a big look into how the market makers are providing liquidity and when they're going to stop doing that, as well as a look into the options market and really kind of what's happening behind the scenes. So make sure to watch this whole thing through, show it some love, give it a like and subscribe, and we're just going to hop right into it. So I'm going to do my best to keep this video short, but I do have a lot of stuff I want to show you guys. So first off, you got that CPI number, which came in at 8.5%. Prior was 9.1, and the expectation average was 8.7, so it came out better than expected. And you got a really nice gap up, like 2% or something, and you hit that really big psychological level at 420. So the first thing I really want to stress, well, today was a really good day for day trading. If you're in the Discord, you know we traded. And the TA, we got in under 3 and it ran into like 10, I think. ALLG and phase. So really good day to day trade. SPY was very flat today. A lot of like theta burning and just killing all the options. But so we're gonna talk about SPY here. Back in before August, I was talking about how I thought we were reaching this bottom, and I gave all these price targets on SPXL, the 3x ETF for SPY, and right now we're at this very big area, the high 89s to 90s. So this is a very big spot here, because from 89 to 90 in my thesis is, if we go past this, we go to 101, and that is a very big move here. That would bring SPY up to 430, which previously, I still have my doubts about that. Let me make this smaller. But when we were finding the bottom of this wedge, I was like, there's a possibility for 430 to get hit out of this wedge, just because that's how you can measure the wedge. This stuff I'm going to explain a little. Pulse theory, I had this in my video from a few weeks ago, where this was a target range. I'm going to explain that in a little bit. But the first thing I want to stress is, the target of that wedge here. So you have the bottom trend line, and this is just a rough drawing, but you'll just to like stress the point here, wherever this top was, you draw it from your A, B, C, D, E, and this was the extension here. So I've had this target here for a while, around 430, but as we've been moving up to these fibs, this was the first target where it could turn down from. This is the next target it could turn down from, and this is a high probability retracement area stocks like to go to, what's called that golden pocket. So it's still pretty far away considering how high we've moved. The daily RSI has not been this high since November of last year. So there's some insane momentum here, but we got a big gap up on CPI over the macro trend line, which is pretty interesting here. That blue line right here, which goes back to COVID in 2018. We gapped up right above it, so we now have 7 gaps. That is a lot of gaps here, and this, I'm gonna keep saying it, it's not a sustainable run. We have to retrace, but as of now, this thing is it keeps on going. So the things we're going to take a look at today, there were 2 specific things we could have seen why or how CPI was going to be good, and that we would get a gap up, which has to do with my pulse zone stuff on SOXS, as well as the DIX and the GEX data, which has a lot to do with the market making, what they're doing. So I think that's the first thing I want to take a look at. Well, first off, yesterday I showed you we got that confirmation of the shooting star, but we need a continuation, and we did not get that. So these bearish candle formations have really not been getting confirmed. They can show up, but they don't really matter until they're confirmed. So it's still looking strong, but this is the calm before the storm, really. The market makers are killing the volatility, which we're going to look at. I said we're going to look at that right now. So this is from yesterday. I did not put this in my video, but this is the DIX. When this blue line is higher, that's signifying bullish sentiment in the dark pools to what the market makers are doing, and the market makers know much more than anyone else. So once I saw this, that was really giving me the idea that CPI was going to be good, and I've actually always thought that since the last CPI. I was thinking that it's peaking, at least for now, and it would have been too easy for retail to make money because everyone was bearish on CPI or the majority. So I really had my doubts that CPI would be bad, and they turned out good. So that's what we got. We were growing, and we got that next move higher. So it's a really interesting area because 420, this is a big psychological area, and we're gonna take a look at the DIX and the GX sentiment right now. Let me find that. Which one is it? So first off, I'm going to show you this video and then I'll show you the DIX, but this is the pulse zone theory from SPY right now. I'll just put that up right now quick, just so you can see how kind of how everything was playing out the way I wanted it to. So here are your pulse zones, where you bounce, you get your breakouts and your, I guess, direction shifts in these pulse zones. And let me clean this up so you can see it more clearly. Retracement. Okay, so a few more lines. And okay, so here's your pulse zone. This is from early August, and I had this in my video. Predict and measure the velocity. We're heading towards that target, that range within the time frame, and the target range. So the point I'm making here is it has hit that range, that higher target. We got that consolidation in here. So I guess it was just enough for a little move higher, but this is what's called the marker target, where it has the highest probability of going besides the range. It can go in this range, but these are the fib measurements, so it's likely to go into here within that range. So you're in this range now. Happened a little early, but that was that projected target if we did not get that breakdown from this area. So the momentum is incredible here, and it's only a matter of time. But you have that Fed meeting coming up on the 17th, and based on what the CPI was, as well as kind of what the bond market is doing, it might be a 50-point basis hike on the 17th. So the next few weeks, as I've really been saying for a while, it's going to be very interesting because we're going to move on to the DIX so you can see the sentiment from the market makers. So this is the sentiment from the market makers right now. You got that little blip up right before CPI, and this was a big signal where I was like, okay, CPI is probably going to be good. But now what do you have? The GX going up while the DIX is going down, and we're going to take this into correlation with previous, I guess, we're going to take it into the past and compare it to this area where I showed you the fractals already. This fractal right here. We'll take a look at the PCI quick, but the point here, the similar structures here. These are the fractals, and the structures are the same. I'm going to say that straight out. The structures are the same here. So very interesting. You had that CPI at the same time frame, basically. What is this? Let me take this off. I'm not sure what that is. So you got that similar structures, and so the data should be very similar too. And that's what you have here. The GX moving up. So specifically, this might be where we are. Literally, like right here, comparing to the March rally. So the GX went down. So you're gonna have to kind of take a look at this closely. But this moved up, like, let's just say like one blip. It blips up once. That's what it did here, and then it starts to move back down, and the GX goes the other direction. So just comparing to this March rally with the same structure, you have the same thing happening within the data from the dark pools and the market makers, and they are still providing liquidity to retail. That's why we're still able to hold these levels. Market makers are still providing liquidity to retail, and you have to see this GX start to go down more percentage-wise, preferably under 45%, 44%. In order for this, you're going to see this. It's going to happen, and we're just waiting till they stop providing liquidity to retail, and that's what they've been doing this whole time. So The options market, PCC, put to call ratios, very interesting. Right before CPI, you could see this inflow of puts right here. They got destroyed, of course, and it doesn't seem like it's time yet. There's going to come a time. I still believe it's very imminent, but hundreds of millions in those September puts, they're all still there, and it's only a matter of time. This cannot last forever. Squeezes are not infinite, so it's a waiting game here. So what I want to show you right now is the other reason why we could have foreseen this, or had more confidence in this good CPI data, was on here. Yesterday in my video, I showed you the pulse zones for SOXS, where I said we're going to get our retracement here. We bought in, I forget what we bought in. I think it was, some people bought in here. I got in a little higher, and we sold yesterday right near the peak, and I said we're looking at that retracement very soon out of that pulse zone, and that's what we got. So this has a very strong high correlation to SPY. So usually when this goes in one direction, SPY does the same thing, or the inverse, because this is a bear ETF, but I was 100% certain we would get a retrace here, just because of this wave count and the pulse zones. I was very confident in this retrace. I gave the levels, which were in the Discord. First level was 40, and then the next area was like 48 to 47, 38 to 37 something, and that's what we got. So with that high correlation to SPY, we could have foreseen this, because this was a big drop. I expected a big drop too, so that was another reason you could have seen this coming for SPY. So a lot of things are lining up here. DIX, GX, they're doing that, kind of disconnecting the opposite directions. It's only a matter of time. So I showed you all the options, the CPI data, GX, the gaps, market makers. We're getting close to the point where they are going to stop providing liquidity, and once they do that, you will see the shift. They are still providing liquidity, so that's the big reason here. The gamma structure, it's been providing, I guess, like support through this entire move up, where it's just been floating and kind of like drifting upwards in a way. So it's only a matter of time, is what I'm going to keep saying. And in the meantime, you just gotta watch these big resistances. The Nasdaq, you had a big trend line here. You gapped up, so chance it's an exhaustion gap. We had that right before this down day with the 9 count and that bearish candle. So that was, you were very likely to get that drop, but it didn't continue. And you also respected that trend line I pointed out in yesterday's video that you want to be watching, which was this one right here. You were right on it basically, which when you're looking, depends on what kind of chart you're looking at, but you closed right under it actually, and then you gapped up. That was a pretty big gap up, and you gapped up through that diamond wall at 416 to 417, which I've been talking about for a while. So it's interesting, because for me to say that, like, okay, now we've gotten past 416, 417, I would have wanted to see it happen during intraday, where it's just kind of like a move up through it, and not this gigantic gap where we now have 7 gaps here, including that one. So how long can we do this for? You just gotta ask yourself that. There's really not too much else I have to show you. I showed you all the post zone stuff, the put to call ratios, that top line. Oh yeah, this one. So this was what I was watching on a very like shorter time frame intraday basis here. This line, this is the line to be watching here. If you break that, you could be coming up to that main gap, which this has to do with my gap fill algorithms, which if you want to see more, join the Discord so you can see that stuff. That'll be in the description. But the main gap, so these structures have these gaps, which I call main gaps. They have all these structures below here, and there's a main gap where it forms this structure underneath it, and it kind of develops all the way up to that gap and fills it. Now, the big similarities here, you had a main gap here and you went into it. So it was this area where I was deciding, it's either going to be, I think it was 398 or 383, or we're going to 464. And that's where I said I would quadruple down on my short position, which I did. I wrote it all the way down here. I started, I think I sold out completely here. But the point is this is the main gap for this structure right here. And that seems like the next area it would want to go to if we manage to get through, I guess, this diamond wall at 316, 317. We gapped through it, so I'm not sure what to think of that. Tomorrow's another big day to see how this follows up after this gap up. But you now have another gap, and the volume has been slowing down every single day. Now volume on SPY isn't as significant, but it's been falling while we've only been going up, so just something to note. But yeah, that's really all I have to show you. We're just gonna have to see how it continues into tomorrow, and see what the follow-up of this gap up is. So that's why I'm gonna leave this video. If you watched the whole thing through, show it some love, give it a like and subscribe, and make sure to check out the Discord. And yeah, peace out, guys.